Hi, everyone, and welcome again to the Real Estate Investing Foundation with Jason and Pili. Today is Multifamily Monday.
Happy Monday, everyone. And so with a great start to the week today, we are going to talk about the pluses and minuses in investing in small multifamily properties versus large multifamily properties. And here to represent investing in small multifamily properties today is Pili Aloha Yarusi. And for the stronger side about investing in big, giant, large, massive multifamily, Jason Yarusi. Well, welcome, Pili. Welcome to the show today. How are you?
I'm very good.
Great.
I'm very good. So we are going to talk about large and small.
Fine. So why should we invest in small multifamily properties?
Well, for me, because I normally take over I normally do our fix and flip aspect of our business. Small multifamily is just another exit strategy for me. So if the numbers work, then why not? You make the numbers work. So when you get a property at hand, it's a single family property, or it's a 2 to 4 unit property, you do 3 exit strategies. You can either buy and hold, which is your small multifamily, buy and hold. You can flip it, or you can wholesale it. So we try to do all 3. So it just makes sense. But like any multifamily, you have to make sure you have all your numbers in there, especially management. So I know a lot of people, when they're first starting, they think they can just manage it themselves. But if you don't put those numbers in there from the very get-go, you'll always be trying to catch up. So put those numbers in there. So if this is your first one, pick up a few. But once you get up to 10, you can start treating it like it's a large multifamily.
What's some of the other numbers they should be looking at? What's some of the other expenses to have in there?
Well, you need your CapEx. You basically follow everything you do when you look at large multifamilies.
So we're talking repairs and maintenance,
utilities, CapEx, utilities. You look at
insurance,
you
taxes,
basically put everything in
management. Straight down the line of everything you would be looking at from any property, single family?
From any property.
Okay.
No matter what. Even if you were looking at it like for a regular flip, and you just look at the numbers. Make sure your numbers work no matter what. No matter if it's small, large, I don't know, yellow, purple, make sure your numbers work. So if you're already in the small multifamily to single family arena, then going into small multifamily just makes sense.
Now, is there some different idea you're going to look for in a property manager? What kind of property manager are you looking for?
Well, I would think it'd be a little bit easier to find a property manager for your single family units, but you're going to want to find somebody that's local that can take care of all the properties at once, especially if you are looking at properties in your like where you live. Now, if you're looking, for instance, we have a friend who lives all the way in Shanghai. She has properties in Texas. She found somebody local that takes care of all of her properties. They manage it. She just takes care of the finances.
Okay. What are some of the downsides on smaller multifamily properties?
There's no downsides.
No downsides.
I'm here promoting single to 2 to 4 multifamilies. There's no downsides.
Okay, so maybe that's my side.
No.
Okay,
no.
Okay.
No. So the downsides.
When I say downsides, maybe the points that make it a harder arena to deal with.
Well, anytime we talk about multifamily, we always say the large multifamilies are so much better because you have everything under one roof. So if you have,
so it'd be harder to scale.
Yes.
Okay.
Yes and no.
Okay.
It just depends. So if you have one large multifamily, then say it's a 100-unit building. It's all under one roof. CapEx is one roof, one building, or like maybe a few buildings. If you have 100 multifamilies or 100 like single family homes, 2 families, 4 triplexes, then you have multiple units that are scattered.
Multiple water heaters, multiple roofs.
Multiple of everything.
Repairs and maintenance and CapEx could be more expensive.
Yes, it could be.
Okay.
But this is why you have your numbers done from the very get-go. You make sure your numbers are correct. You make sure you get a good management company. You start hiring as if this is one unit, like as if you want to have, like, for instance, you want to keep in mind that at some point you want to have an in-house caretaker, an in-house maintenance guy, somebody that you can go to instead of having to call the plumber for every, clogged drain.
Now, do you suggest if someone is looking to get into building a multifamily portfolio that they start with some smaller properties first, or just jump right into the big stuff if that's where their end mind is?
It kind of depends where your mindset is. I mean, yeah, you can get your feet wet. Like Jason and I got our feet wet with 2 duplexes in Indiana.
Hmm.
And that's how we kind of expanded our minds into out of state and into multifamily.
Well, it
So
checked the box on a lot of stuff. One, it checked the box on buying multifamily. It checked the box on buying out of state. It checked the box on hiring teams and building teams out of state. And it checked the box on learning other markets.
Yeah.
Okay, cool. Okay.
So I give the microphone to Jason. Large multifamily. Right. So why would you want to get into large multifamily? So here's where all the
important stuff is. So if you've just accidentally skipped that entire first part of the interview, we'll take your pen out now because we're about to get serious. No idea. It was instrumental to buy the first set of duplexes out of state and just run that route.
So you're saying it was important?
Definitely important. Definitely important. It gave us the framework and the guidelines. Could we have gotten to where we are today without it? Sure. Yes, we could.
But it would have taken us longer.
Yep. And we made plenty of mistakes and with the duplexes, and ideally it gives a lot of things to help us have better framework going forward. However, with large multifamily investing, you have a lot of options that can work in your favor. Of course, the economies of scale, which Pili spoke about. You can have a number of units under one within reasonable location under one or a couple of roofs that can be handled by one maintenance person, one office manager, one leasing person, and it can keep your cost to a minimum. Also, since a management company is having all these units to manage, you'll also be able to be more efficient with the fee they're going to be charging you. Where a single family or a duplex, they may be charging between 8 to 12%. You could be 3 to 5% with a smaller multifamily property. Financing, it will be easier for you to finance a large property because for many reasons, depending on the debt you're going to get, if you need to keep at a certain occupancy level, say 90%, if it's a 10 family, well, that is one vacancy, where on a 100 unit, that could be up to 10 vacancies. And beyond that, the debt options are a lot more scalable because they're looking at the properties first to make sure that it's able to be an efficient asset. And then second, qualifying you as an operator. Not to say you don't have to have an experience, not to say you can be a bad operator, not to say you can have a million negatives to you, but the operations of the property are first and foremost.
So, whoa. Okay. So stop right there. Let's go back to financing. So now you're talking, these multifamily properties could be in the millions. So if I don't have that mindset yet, how do I wrap my head around the mindset of it's actually easier? Because that doesn't make sense. How can it be easier to fund a 100-unit building than a single family home?
Well, it has to be where your focus is. Ideally, if you think that you are just going to buy 110 plexes and you want to grow that way up to 1,000 units, well, ideally, then you should start going bigger now. If your goal is to have 10 duplexes and have 20 units and that is your goal, then start smaller. That is absolutely fine. So it has to be where's your end and you can build backwards from there. However, if you have a larger property, the banks and the lenders and the management companies are able to look at it because it's a cash flowing asset that you're looking at the bottom line to determine the value of the asset. Where if you're a residential 1 to 4 units, you're looking at you, the lender, as ideally you are the primary caregiver, and how is this affecting your income to debt ratio. So it's a lot easier for you to go larger. Plus on options, you can have this on all options from a single family to 1,000 units, but you can also have a better option to syndicate a deal where you're able to provide cash flow and return for other investors. You're able to pool resources so you can buy larger apartment buildings so you can all capitalize from the economies of scale. So it works a lot more in your favor from that. So ideally in any property, you can look at a number of different things, but the advantages of multifamily and why it's always something that we won't say stable, but can have more consistent track record is that there's tax advantages, there's appreciation, there's depreciation, there's cash flow, and of course, there's debt pay down. So there's a number of different reasons why multifamily is attractive. And the larger you go, the more those economies of scale work in your favor.
The only reason why I'm kind of pointing on that is because that's a mindset question that comes along all the time when we're talking about large multifamilies. It's the money piece. People think it's harder, but it's not, because just to put it into simple terms, single family to a fourplex, they look at you. Anything above that, they'll look at the asset.
And ideally, if you're looking at numbers, just 20 units versus 100 units, well, you could buy 20 units in New Jersey for, $4 million, where you could buy, 100 units in, I don't know, Indiana for $1 million. So, or Alabama for 600,000. So it's all relative to ideally where you're looking and how open you are to other arenas and where you want to be in the market and what kind of assets you want to buy. Do you want to buy A, B, C, D assets in A, B, C, D markets? And that's going to dictate how large you can go and how much you can do in-house and what you can control. So on a smaller multifamily property, you may be able to tackle that in-house with just your core network, yourself, your family, cousins, uncles, fathers, brothers, aunts, uncles, any of those. Whereas some of these larger properties, you may have to bring in team members and go in there, and whether it's syndicating or pooling resources from friends and family. So a lot of different options to look at things. However, the core focus here today is that note your options and note where you want to be in the end, and then build yourself backwards. Because as we can come up with today, since I did win this conversation, is that there is definitely good reasons to do both. However, both reasons are really great depending on where your outcome is.
See, why I think I won this conversation is because it depends on where your mindset is. If you can't wrap your head around the large multifamily, by all means, don't let that stop you. Start with small multifamily, start with single family homes, start with, if you're already in investing and you're already flipping, you're already wholesaling, and you have a cash flow property, by all means, keep it and start building your portfolio, and then grow your mindset. There's no winners or losers here. It's whoever makes the cash flow. So if your property cash flows, then keep it. It just makes sense financially.
Which is completely opposite from what we did. Selling our cash flow and small cash flow properties to go larger, but our mindset was on the larger. So exactly. On that point, I've just disrupted your entire theory there. However, no, it is a good point.
We sold because we could make a profit on the sell.
We did.
And we weren't going to scale into small multifamily.
Exactly.
So
good point. Our mindset had changed and we were going larger.
Exactly. But without those two duplexes, we wouldn't have gone into multifamily.
That's great.
Or it would have taken us a long time. Anyway, enough of our arguing.
Fair enough. All right. This is Jason and Pili. Happy Multifamily Monday. Get out there, take some action. It's a great week to get started. A lot of activity going out there. I'm seeing a lot of properties come across the desk. That means there's a lot of energy going out there into summer. Again, stick to your numbers, buy right, focus on where you want to be, and happy hunting.
Happy hunting. Go out and get it. So this is the Real Estate Investing Foundation with Jason and Pili on a Multifamily Monday. We are so grateful to have you listen to us, and we will see you later.
Bye now.
Bye.